Welcome to the Fiscal Physical Podcast. Join us each week as we sit down with the founder of Alchemy Wealth Management and author of Your Fiscal Physical, Ryan Nelson. Tune in to gain valuable insights and practical tips as we simplify complex financial concepts into digestible lessons. From budgeting to retirement planning, this podcast is your go-to resource for mastering financial literacy.
Welcome, everybody, and thank you so much for listening to the Fiscal Physical Podcast. We are on episode 37 here. Can you believe that, Mr. Nelson?
It's crazy.
I know, they're really just flying by. You know, all this content here, you just get overwhelmed with I know my physical knowledge has grown what's the term? Exponentially.
There you go.
Yeah, it's
sounds like it.
Yeah, sure. Yeah, my grasp of the English language is not though. So, I'm here with Ryan Nelson, founder of Alchemy Wealth Management, my co-host on this podcast here, who is also a best-selling author. I don't know about best-selling, but we're going to go with it here. So, Ryan, last week we talked about tax loss harvesting. This week, as you guys could probably catch a theme with some of these episodes here, we'd like to dive into the other side of that, and we're going to talk about this week about tax gains harvesting. And like I said before, we were talking about this episode here, and I really don't know much about this, so I'm very curious to see. I learned a ton on the last week's episode about the little perks and how it might be beneficial to do tax loss harvesting. So I'm going to turn it over to you, Ryan, and talk about tax gains harvesting.
Awesome. Yeah. So tax gains harvesting, as you might be able to infer from the name, is almost the exact opposite of tax loss harvesting, right?
Mm-hmm. Yep.
And I find this interesting because tax loss harvesting, you'll hear, I think, a lot of I think tax loss harvesting has become a bit of a buzzword in the industry. And so if there's a way, if I was trying to sell a financial service and I could say, hey, Aaron, I could do tax loss harvesting and reduce your tax income, you'd probably say, that sounds pretty cool. Maybe I'll buy your service, right?
Sure, yeah.
Tax gain harvesting would actually be increasing your tax bill this year. So it's not a very sexy thing to sell, right? And so tax loss harvesting has become, I think, a bit of an industry buzzword. I think a lot of people have taken it, I'm going to put in air quotes, taken advantage of tax loss harvesting when it may actually be in their long-term detriment. And they were just unaware, of course, trying to do what's best for them, but just a little bit ignorant about how this all works out. So let's talk about tax loss harvesting. So tax gains harvesting is when you effectively realize gains into a current year that you didn't need to. So again, if we take the same example from last week, if we invest in Company A, and Company A goes for, maybe we put $100 in Company A goes up from $100 to $150. Mm-hmm. But in this example, we haven't sold it yet. So we're just sitting there, we have it at $150. And so we could just say, we love this investment. We're just going to keep writing it out. Maybe we'll go to 200, 250, 300, right? Tax gain harvesting, you may say, I'm going to realize these gains. Mm-hmm. So even though I don't need to sell I don't need the cash, I don't need anything, I'm going to sell stock A. I'm going to realize $50 in gains explicitly so that I can pay taxes on it this year. And so why might you want to do that?
Yeah.
So if you think your taxes are lower this year than next year or 5 years from now or 10 years from now or 20 years from now, you might want to pay as much as you can in taxes now, right? And so similar to the theory behind a Roth IRA, you pay all your taxes up front, you put your money in this investment account, you get all the growth in basically your principal in that case, tax-free in the future, right? So you're saying for a Roth IRA, you're saying I want to pay my taxes now at these lower, what I perceive will be lower rates and avoid future higher tax rates, right? And so this is a similar strategy where you could say, hey, if I think my taxes are going up over the next 5, 10, 15, 20 years, you could say each year I want to recognize more and more taxes so that I can avoid paying, I want to pay them now at these lower rates. And if you look at, again, we had an episode a while back about long-term capital gains rates, right? And if you remember from that episode, a married couple earning with less than $94,000 of income, their long-term capital gains rate's 0%.
Right.
So a great example of this would be maybe you have a couple and they earn a combined $80,000. So maybe one spouse is working, making $80,000, another spouse is staying home, taking care of the kids. They earn $80,000 as a couple. And what that means is they could earn an additional $14,000 of effectively long-term capital gains, and it be taxed at 0%.
Wow.
So if you have this couple earning a combined $80,000 and they weren't planning on selling anything this year, well, but if you start thinking about this and you say, well, gosh, you could realize up to $14,000 of gains. So they may have these big gains. The market's done really well over the last few years. They could have these big gains, and we could say, well, what if we realized $14,000 of those gains? You could get it at a 0% long-term capital gains tax rate, right? If you don't take it now and you keep kicking the can down the road, those same $14,000 of gains, when you take them at some point in the future, so maybe 10 years from now, if you don't take them now and you take them 10 years ago or 10 years from now when you need the money, who knows what long-term capital gains rates will be there? Maybe even if they stay at the exact same rates, you might be paying a high, 15% at that point in time, right? Or the rates themselves could go up, so you might be paying 20%. Who knows, right? So you might say, yeah, no, I want to accelerate my taxes. I want to pay as much taxes today. And in this extreme example, you'd be forcing those taxes into a 0% tax bucket.
Yeah, absolutely.
So it'd be a great strategy to intentionally pay more in taxes this year. And in this case, in this example, when you have more taxable income, it's being taxed at 0%, but there would be examples where you could do this and it's being taxed at 15% or something, and you still think it could make sense because if you think those long-term capital gain rates might go up to 20 or 30% in the future. So again, tax gains harvesting is just intentionally placing cells in your portfolio to recognize gains now to pay current tax rates and avoid future tax rates.
That's wild. I had no idea that was an actual something that you could do. Like,
yep.
I mean, that is great. Every time I think about harvesting, like I'm going to be like, oh, now I'm going to think about tax loss and tax gains specifically with that too. Are there any restrictions on this? I don't know if there's I don't know if you can.
Sure.
There's always restrictions. There's always things that go with it. It's like, oh, okay. But in that example you painted, like that makes perfect sense.
Yeah.
Like why you would do that.
Yeah. Exactly. That does. And maybe before we go into the restrictions, so if we look at that scenario, let's say somebody was a married couple in 2024 was earning $80,000 a year, right? And maybe they had, placed some trades where they had $10,000 of gains. So those $10,000 of gains were due to get taxed at 0%. Mm-hmm. You could, in theory, do tax loss harvesting, sell some losses, offset those gains, be taxed at nothing, but you were going to be taxed at nothing anyway.
Sure.
Right?
Yeah.
So you might as well save those losses to offset something else in the future, right? Or depending on if it's a good investment strategy. So it's just one of those examples where I see a lot of times that'd be an example of somebody who would benefit from this tax gains harvesting, but instead the sexy thing to do, right, in air quotes, the sexy thing or the easy thing to sell is reducing people's tax bills this year, and so they'll do tax loss harvesting, and it really is a detriment to their long-term success.
Definitely.
So you want to be focused on reducing your lifetime tax bill, not your tax bill in any at any one single point in time. So it's really focused on maximizing your overall wealth over your lifetime. But so as far as restrictions go, there's no real restrictions. There are sort of limits on how much would be practical. This is really just accelerating gains, right? Tax gains harvesting. We're selling things that won't. So you could, in theory, in a single year, sell everything you have that made money. You'd pay taxes on all those gains. You'd want to actually figure out, does that make sense to do, right? It may get to a point where it's no longer practical or strategic. But that's not necessarily like an IRS limitation.
Sure.
That'd be a limitation within like your strategic plan. So you should come up with a strategic plan when you're doing tax gains harvesting, figure out, okay, how do I optimize my tax situation? But there's not really an IRS limitation on it. Just the more you sell, the more you pay in taxes.
Yeah. Awesome, Ryan. Well, I think that was an incredible breakdown of this episode, last week's episode, of things that I honestly, before I saw this on like the potential docket, I didn't know what this. I had no idea. I'd heard the term like harvesting when it comes to like gain
potatoes.
But potatoes, corn, any kind of crop.
Aaron's from Idaho, so it's an Idaho
I've harvested a couple potatoes in my life. Not many. It's pretty hard work, but. Learning about this and thinking about like, okay, how do you maximize like your returns over the time of your life, and pretty much, your tax bill over the like.
Yep.
It's so interesting. There's so many different strategies. I'm just thinking about these, and I'm going through all these different scenarios that I haven't thought out. So I'm not going to talk about them, but of how they could potentially be if you're on top of your stuff, or if you have somebody who, like a financial advisor, a CPA, who can be like, hey, this is the best move for you because X, Y, and Z, and being able to break it down like that. I'd be like, yes. Like, why wouldn't we do that?
Right.
But not being able to do that, you could potentially be losing out on these certain things too. So that also just gets my brain turned. I was like, oh man, like how many of these opportunities are there, these tools to use in your financial tool belt that maybe people don't use?
Oh yeah, there's tons of them, right? So absolutely.
Excellent. Well, thanks so much, Ryan. This got me buzzing over here just thinking about these certain things, and now learning what they are. And so, like, if somebody mentions that, I'll be like, I kind of know what you're talking about. Let me call up my financial advisor, though. So
at least you have a podcast you can refer to.
Exactly. Yeah. So you guys check out episode whatever this one is, 37. Yes, as far as tax gains harvesting. So excellent. Well, we'll go ahead and pause here. We'll be back on the other side of this, Ryan, and everybody hang tight.
And now, to put the personal in personal finance.
Welcome back, everybody, to this side of the Fiscal Physical podcast, where we're going to get into the personal section here. Ryan, I have a question for you, and this is one that I was asked the other day by one of my team members at work, and it really threw me for a loop. Sure. Like, I was like, I have no idea as far as it, but it kind of, and then I got to thinking about it, and so I'm curious, like, if you've had in your life yet, and you could still have more, but like that I made it moment, like I found my niche, like I've made it, like I've gotten this big accomplishment, whatever that might be, or however you want to define it. I'm just curious to see how you describe that.
Yeah, I like you, I don't know. I don't know exactly how to answer the question. I think, I mean, at the end of the day, I guess I feel like I have sort of made it. Mm-hmm. I don't know that there was like a moment. I feel like it's a gradual process over years, right? One of the examples, I think we mentioned it on a previous podcast. I know I think we're going to re-air another podcast. I know I talked about it on there, but like, an example I like to share a lot is if I run into somebody at a party and I want to talk, we're talking personal, they ask me what I do. I say I'm a financial advisor. They ask me some, finance topic, and then they're like, "Oh, no, you're at a party. I don't want to bother you, right?" Yeah. And I'm like, no, this is what I want to talk about, right? So I think, to some degree, like, I'm doing what I enjoy doing. You can't beat that. I own my own business. Like, it's successful. I can't beat that. I've been fortunate enough to be recognized, like, in the community as for 20 under 40. Alchemy Wealth Management's been recognized as for some of those best of awards in the community. So certainly, like, looking back, I think, like, God, I'm in a good place. I like what I do. I've seemingly been successful. So yeah, I can't complain at all, but I don't know that there was ever like a single moment. Sure. I think it was just kind of this gradual evolution of being completely inept to where I'm at today, right? Just slightly inept.
Yeah, just like, if that's a word or not. Yeah, and that was my kind of thing too. I was like, I don't know if I can't specifically put my finger on like a professional thing that I've made it specifically, but you equate it to like personal life and these things, and it sounds funny, but when my son started sleeping through the night, I was like, oh, I made it. Like, I was like, this is it. Like, I can get back to like, I have some time with my wife. I can get sleep again. Right. And I just didn't realize how crucial sleep was. And like, that's what I like. When that person at work asked me, I was like, honestly, professionally, no. I think I still got a lot of room to grow, and I think I'll know when I get to that moment, or at least hit one of those thresholds. But personally, I was like, oh, that's it. Like, when my son started sleeping through the night, I was like, okay, I can do anything now. Yeah. Like, I feel comfortable, like, going out in public now that I can like talk to people because I'm not working on like 2 hours of sleep. Yeah. So it's interesting how you want to define that overall, but it really threw me for a loop, and I was like, oh, I can't wait to ask Ryan that specifically.
That's funny.
So
that's a good question.
Yeah. Awesome. Well, we'll go ahead and wrap this one up here. Once again, want to thank all the listeners. If you guys have feedback, please let us know. We'd love to hear it. We are, nothing if not open to feedback there, and we want to hear what you guys want us to talk about as well, too. So send us your questions, podcast@alchemywealth.com, or text us, email us, send a carrier pigeon, whatever you want. And I'll go ahead and end this one here. And Ryan, give us your famous quote.
As always, stay the course.
Thank you for joining us for the Fiscal Physical Podcast. Until next time, happy listening. And as always, stay the course. If you have a question or topic suggestions, please email us at podcast@alchemywealth.com. If you enjoyed today's discussion, subscribe to the podcast to ensure you never miss an episode. And consider leaving us a rating and review on your favorite platform. This helps other listeners like you find the show. For more resources, you can visit Alchemy Wealth Management's website at www.alchemywealth.com or find your Fiscal Physical, the book, on Amazon. We'd be remiss if we didn't mention that personal finance is just that, personal. Please don't take anything we say as advice. The preceding content is for informational and entertainment purposes only. It's not an offer or a solicitation, nor should it be construed or relied upon for tax, legal, or investment advice. It doesn't consider your personal financial situation or objectives and may not be suitable for you.